Hey traders, Raghee here, and in this free recap video, we're going to talk about this rip higher that we've seen in the index futures, but I'm also going to point out a number of markets that really did not participate in a day. The stock market saw a 545-point rally in the Dow, about 194 points in the NASDAQ, and I think like another 50, I can't remember off the top of my head, points or so, 58 I think, in the S&P. So I mean a big move. I think it's 58.5 points in the S&P. So big moves in the markets. And a lot of people will say, well, Rog, this is the midterm election reaction, which I agree. I mean, I think cyclically we do see strength with the midterms. We saw a lot of strength in the market before the midterms. And one thing that I was looking to capitalize on was the strength we saw before Election Day Tuesday, and whether or not that was the market, knowing that, you know, history and tendencies are certainly on the side of the bulls into an election. But you can clearly see that was not fully discounted. You know, the market actually still had a little bit more in reserve despite the previous week's rally, which probably could be credited to the idea that the U.S. was probably closer to some sort of agreement with China than they really are. Maybe the fact that the door for communication is still open was something that the buyers really liked. I mean, they liked it for 3 whole days, rallied the market very strongly last week, and then we're seeing another surge here today. So again, midterms have the seasonality or cyclical of the midterms has brought positive returns to the equities markets more often. In fact, I want to say since the 50s, we basically look at the midterm election year and basically between, if you're going to break it down, say between the S&P, I remember reading this, that in the following year, if you go October to October, it's something like a 17 or 18% gain. And it's done it quite often, 17 times since like 1950 or something. So yeah, I mean, there's a tendency, no doubt. So the next thing we got to think about is that there's a typical interesting election cycle where we oftentimes will see a drop before midterms, and we definitely saw that on October 10. So a lot of people say, well, yeah, this was the drop, the uncertainty drop, although I think it's something much more foreboding. But I think this is kind of looking at a very interesting cycle, this 4-year election cycle. We can talk about it more, but I don't want to dive too much into it. But there are a lot of really interesting tendencies for the market during midterm years, and you know, it's something that I don't want to discount, but at the same time, we're not in the same environment. We have an emerging markets meltdown happening. You know, look no further than the EWI, which is Italy, the EEM, which is predominantly China. Look at the EWG, Germany, and the DAX. They did bounce, but look at the downtrends that they are in. So that's another thing to keep in mind. And then I've talked quite a bit in previous videos about the contraction that we're seeing in non-core CPI. And you know, one remarkable thing, despite last week's rally in equities on the optimism about US and China, the crude oil market, even with impending sanctions, rallied on that bounce in equities exactly none. In fact, that very week that we saw a really terrific bounce in equities, we saw a break of the 200 EMA on the daily time frame of crude. And so, you know, this is where I kind of ask myself, look, I'm going to trade what I see, and certainly it's okay to look for those overbought and oversold levels using the volume weighted average price, something I talked about in yesterday's premium video. So it's as tactical and short term as I got in the premium video yesterday. I'm getting a little bit bigger macro, seasonal, and cycle today. Because one thing that disturbs me about today's rally is how little, other than equities, participated. In other words, bonds really didn't sell off that hard. Gold did not sell off all that hard. We didn't see crude oil rally at all. We did not see copper rally at all. So this kind of euphoria that we've seen certainly has a justification in terms of post-midterm patterns that we see. But I think the backdrop of what we're looking at is a little scarier this time. And while equities could not wait for the uncertainty of midterms to be done, we got what we thought would happen. And that was the Democrats kept the House, the Republicans, or actually they got the House, they won the House, and Republicans kept the Senate. Well, that aside, I've been also talking about where we can get long, and I'm going to still talk about those names. You know, for the better part of about going back 90, 100 days, we've been talking about in a Simpler Futures room, focusing on these sector watch lists and continuing to be bullish in healthcare, in staples, and in utilities. Okay, so there you go. Healthcare, staple, utilities. Names like Johnson & Johnson, names like Merck. Okay, there are a number of interesting retail names that have been very strong. And these are individual stocks that oftentimes have an important weighting within these sectors, and these sectors which have important weighting in these futures. So to me, it's almost like breaking that futures contract apart, seeing what's in it, and really developing the best relative performance watch list that you can really create. And that's why I think futures traders really become such effective stock traders, because they're taking a look at what's performing, what's outperforming, what's underperforming, and they can be much more tactical stock pickers with that knowledge. So think about that. Today's a little bit more of a macro convo. Yesterday was a little bit more, day trading tactical, where we got long the NAS into the close and things like that. Will I continue to juxtapose both the short-term day trading, trade what you see type mentality with the macro? Absolutely. That's what we do here. I want you prepared for any eventuality. So I think you watch yesterday's free video and today's, you've really got a good idea of how we're navigating, through these markets. Hope that was helpful, and I'll see you in the next update.